Hey, mortgage rates, well, they drifted lower. Job growth came in weaker than expected, and home prices are no longer racing higher, but they are not exactly collapsing either. So, what does that mean if you're buying, selling, refinancing, or advising clients right now? Welcome to the What's Up with Real Estate Show, your weekly strategic housing market briefing. This week's we're covering I got my glasses in my hand, three things: slightly better job growth, slower job growth, slightly better mortgage rates, and why home prices are basically flat, but still very local. And stay with me for today's mortgage tip and money tip, because with Independence Day weekend here, we're going to talk about a different kind of freedom. So with that said, let's move on to talking point number one. And hey, I'm trying not to wear my glasses, so just bear with me with this. And hey, job growth slowed in June, and Sol is here to be our strategic guest host. Say hello, Sol.
Hello, everyone. I'm thrilled to be here, ready to add some sharp insight.
Great.
Let's break
dive
down
in.
that job growth.
Yeah, let's do it. Let's hear. Here's what just happened in the labor market and why housing people should pay attention. ADP reported that private employers added 98,000 jobs in June, with annual pay up 4.4% year over year. That was softer than the May pace. And then the Bureau of Labor Statistics reported that total non-farm payroll employment increased by only 57,000 jobs. And April and May were revised down by a combined 74,000 jobs. Now, let's be clear, this is not a disaster yet, but it is definitely a slowdown. And mortgage markets watch jobs ever so closely, because employment affects wages, spending, inflation, and ultimately the Federal Reserve's comfort level. A very strong jobs report can push rates higher. A weaker one can sometimes help rates ease. In plain English, the labor market is not falling off a cliff, but it is not running hot either. So, Saul, what do you have on this?
Well, this slower job growth is a balancing act. A cooler labor market might ease mortgage rates a bit, but we need steady confidence. Buyers get cautious if the economy cools too much. So preparation is key.
Yeah, for Houston and Texas, this matters because our market is still tied to job stability, relocation, energy, healthcare, construction, and small business confidence. Buyers are watching payments. Sellers are watching slowing activity. Agents are watching hesitation. And we see more hesitation in the market today than we've seen in quite some time. Agents, are your buyers getting more confident, or are they still waiting for rates to drop? And hey, so jobs cool, that help take some pressure off of rates. Now let's talk about that number specifically. And again, we are made some few changes this week, and we are some of our transitions are slightly slower, so forgive us, but mortgage rates drifted lower. Rates moved in the right direction this week, but don't confuse relief with rescue. Freddie Mac's primary mortgage market survey showed the average 30-year fixed rate at 6.43 as of July 2nd, 2026, down from 6.49 the previous week and down from 6.67 a year ago. Freddie Mac also reported the 15-year fixed at 5.79. That lines up with what we're seeing. Mortgage rates have improved modestly, helped by weaker jobs data and lower inflation pressure concerns. But let's not oversell this. A rate moving from the high sixes into the mid sixes helps, but it does not magically fix affordability. Buyers still have to deal with home prices, insurance, taxes, HOA dues, and cash to close. Plain English, better rates help, but better planning helps more. So,
Exactly. The key is not waiting for a perfect market. Consumers often miss opportunities by waiting for conditions to feel easy. In reality, smart plans and preparation win when the market is uncertain.
yeah, buyers, what number matters most to you right now? Is it rate, payment, cash to close, or the price of the home? And hey, that's exactly why we don't just quote rates around here. We build mortgage plans. And now for a quick word from our sponsor.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Hey, thank you, Rate. Hey, if you don't have the Rate app on your phone, go to www.mortgagemack.com and click on the QR code and download your free copy of the world's greatest mortgage mobile application on the planet. Okay, talking point number 3, price growth picks up slightly. I'm reading without my glasses, and it's really sort of a strain. So, price growth picks up slightly. This home price headline sounds positive, but there's more underneath it. The S&P Totality Case-Shiller National Home Price Index showed national home prices up 0.8% year over year in April 2026, slightly higher than the 0.7 year over year in March. That means prices are basically flat nationally, especially compared to February 2024, when annual growth was much, much higher. Here's the important part. Flat does not mean cheap. It means rapid appreciation phase has cooled. And for buyers, that means more breathing room, more sellers. For sellers, it means pricing strategy matters again. And for agents, it means the old listed high and wait playbook is pretty dusty. So
Exactly. National averages don't tell the whole story. Real estate is hyperlocal. In Houston or Texas, some areas are still competitive, others slower. The real question is, what's happening in your price point in your neighborhood?
yeah, is the market up or down in your neighborhood? The better question maybe is, what is happening in the price point in this neighborhood with that property type? I think that's a legitimate question because it can vary from one community to the other. And, real estate is always about location, location, location. So rates are a little bit higher, prices are flatter, and buyers have choices again. And that brings us to this week's most important segment today in relation to Independence Day. So happy 4th of July. Happy birthday, America. So most buyers don't lose homes because they are unqualified. They lose because they are unprepared. Since this is Independence Day weekend, let's talk about independence in a practical housing sense. Financial independence does not mean you never need help. It means you understand your options before pressure shows up. In the Declaration of Independence, the founders listed grievances because they believed people should not be controlled by distant decisions that they could not influence. I'm not running this into a civic lecture, but everybody relax. The grill is safe, but here is the practical housing lesson here. When you are buying a home, you do not want the market to control you. You do not want a seller's deadline, a rate move, a surprise insurance quote, an appraisal issue, or an underwriting condition to be the first time you discover our strategy has a hole in it. This is why a pre-approval letter alone is not enough. A real mortgage strategy should answer these questions. What cash to close do you actually need? What loan program should be compared? How strong is your offer, and do you have a strategy? How long should your financing timeline be? Should the appraisal be ordered during the option period? And finally, are taxes, insurance, HOA dues, and reserves being fully considered in the transaction? And this is where our E to the power 4 comes in. Educate, which means we convey to the buyer the understanding connected to the numbers. Empower, so that you know what your options are and you feel empowered when making big decisions, and execution. And we believe if we educate and empower, buyers will be prepared to execute during the transaction. And finally, experience. And we hope that you'll have a meaningful experience with us and our team. And that is what we mean when we say plan not a pitch. For buyers, preparation gives you leverage. For sellers, preparation gives you your net. For agent, preparation keeps deals from falling apart. So type plan in the comments if you want a smarter mortgage checklist before you buy or list your home. And if this segment helped you, please subscribe or follow, because every week we're trying to make housing market a little less confusing. Now let's bring this in for a landing with this week's Stoic quote. So this week's Stoic quote is, we should not trust the masses who say only the free can be educated, but rather the lovers of wisdom who say that only the educated are free. The idea is simple. Knowledge is not just information, but knowledge is leverage. In housing, the person who understands the numbers, the risks, the timing, and the strategy is freer than the person who is simply reacting to headlines. So this week, don't just chase noise. Let's seek clarity together. And what would make you feel more financially free right now? A lower payment, less debt, more savings, or a clearer housing plan? Now, with wisdom, we are going to move into this week's Stoic quote, and we're going to bring Soul back in here. Are you ready, Soul?
I'm ready, but before we get too serious, let's lighten the mood. Time for a couple of quick puns.
You go. Which
dogs are the most patriotic?
Oh, come on. Yankee Doodles or Poodles. Yankee Poodles or Doodles. Are you up for a duck joke, Soul?
Always. Duck jokes, they always quack me up. And why'd the candle quit? It was burnt out.
Yeah. Why did Mack quit on Friday
end.
afternoon? Why did Mack quit on Thursday afternoon? Because I was burnt out. And yesterday, too. So we had a nice, restful day yesterday. And so let's close this out and thank everyone for joining us for this week's What's Up with Real Estate show. A big thank you to our sponsors, Rate and List Reports, for helping make this show possible. If today's breakdown helped you better understand the market, hit subscribe, follow, and share with someone you love. And if you want to plan, not a pitch, connect with Team Mortgage Mack and join us here every Saturday at 10 a.m. right here on LinkedIn and Facebook. And until then, stay informed, stay engaged, and I'll see you at closing.